Breaking news that could change your financial situation overnight. Congress has just passed the long-awaited $5,000 stimulus check legislation that millions of Americans have been desperately hoping for. This is not a drill. The bill has received final approval after months of intense negotiation, and direct payments are set to hit bank accounts in just 72 hours. Are you eligible for this substantial financial boost? How exactly will the payment distribution work? And what crucial steps must you take right now to ensure you receive your money without delays? In today's video, I'm covering all of this urgent information. If you want to stay updated on this developing story and learn how to maximize your stimulus benefits, hit that subscribe button and notification bell immediately. Your financial future might literally depend on it. The passage of this stimulus package represents one of the most significant economic relief measures in recent history. After weeks of contentious debate and multiple revisions, Congress finally reached a bipartisan agreement that prioritizes direct financial assistance to American households. At the heart of this legislation is the unprecedented $5,000 direct payment, a figure that far exceeds previous stimulus amounts and reflects the urgent recognition of the continuing economic hardship faced by millions of families across the nation, even as recovery efforts slowly gain momentum. Today, we dive deep into the specifics of what happened in Washington earlier. The bill cleared its final hurdle by passing through both chambers of Congress with surprisingly strong bipartisan support, ending weeks of committee negotiations where lawmakers had clashed over payment amounts and eligibility requirements. Mounting economic pressure and constituent demands eventually forced a compromise that settled on the $5,000 figure, significantly higher than initial proposals that range between $2,000 and $3,000. The president is expected to sign the bill into law within hours, having already signaled robust support for the measure. In an unprecedented move, the Treasury Department has been preparing for implementation weeks in advance, enabling the remarkably swift 72-hour turnaround for the first wave of payments. This careful preparation addresses past challenges where administrative delays caused frustration and financial hardship for many recipients, and it sets a new standard for rapid relief. Moreover, this initiative not only promises immediate relief, but also sends a clear signal of government commitment to addressing long-term economic vulnerabilities. So, who qualifies for the full $5,000 payment? The eligibility requirements follow similar patterns to previous stimulus programs, but with critical modifications. Individual taxpayers with adjusted gross incomes of up to $75,000 are eligible for the full payment, while married couples filing jointly must have incomes up to $150,000 to receive a combined $10,000, $5,000 per person. Heads of households earning up to $112,500 also qualify for the complete amount. These thresholds acknowledge that middle-class households continue to face significant financial challenges despite broader economic improvements. For higher income earners, however, there is a gradual phase-out. Individuals earning between $75,000 and $100,000 and married couples with incomes between $150,000 and $200,000 will see their payment amounts reduced progressively, and those above these upper thresholds will not receive any stimulus payments. This targeted approach ensures that relief reaches those most in need while upholding fiscal responsibility. Another groundbreaking aspect of this new stimulus package is its treatment of dependents. Each qualifying dependent, regardless of age, will generate an additional $1,500 payment to the household. This means that families with children or dependent adults could receive a substantially higher sum than the base $5,000 per adult. For instance, a married couple with 2 children might receive a total of $13,000. This provision directly addresses the increased financial burden on households that support dependents in these challenging economic times. The implementation timeline is exceptionally aggressive compared to previous efforts. The Treasury Department and IRS have announced that the first direct deposits will appear in bank accounts within 72 hours of the president's signature. This initial wave will target taxpayers who have current direct deposit information on file with the IRS from recent tax returns or previous stimulus payments. Officials estimate that approximately 70% of eligible recipients fall into this category and should see funds by the end of next week. For those without direct deposit details on file, paper checks will begin mailing within 2 weeks, with distribution continuing weekly in a schedule similar to past efforts, prioritizing lower-income households in the mailing sequence. Depending on Postal Service efficiency in various regions, recipients can expect checks to arrive between 1 to 3 weeks after mailing begins. For those needing to update their information or check their payment status, the IRS will reactivate the Get My Payment tool on their website within 24 hours of the bill signing. This portal will allow you to track your payment, confirm your method, and update direct deposit details if necessary. Given the rapid distribution timeline, it is crucial to verify your information immediately once the tool is live to avoid any delays in receiving your payment. Many viewers have expressed concerns about the tax implications of this stimulus payment. Rest assured, like previous stimulus checks, these $5,000 payments are not considered taxable income. You do not need to report them on your tax returns, nor will they affect your tax refund or liability for the current year. The payments are treated as advanced tax credits, designed to provide immediate relief without future tax consequences, thereby maximizing the impact of the full amount for recipient households. This stimulus package is particularly significant not only for its size, but also for its expanded eligibility criteria compared to earlier programs. In addition to the standard income and filing status qualifications, the new legislation now includes provisions for several groups that were previously excluded. Adult dependents, such as college students and disabled individuals, now qualify for payments, addressing a major criticism of earlier relief efforts. Mixed-status households with non-citizen spouses will also now qualify as long as one spouse has a valid Social Security number, representing a notable expansion from past restrictions and acknowledging the financial challenges faced by these families. Furthermore, qualified non-citizens with work authorization and Social Security numbers are now included, broadening the economic relief to all tax-paying residents irrespective of their citizenship status. For those who have not filed taxes recently, special provisions have been made for non-filers, including beneficiaries of Social Security, Railroad Retirement, SSI, and VA benefits. These individuals will automatically receive payments based on existing government data, much like previous stimulus distributions. However, if you have dependents who qualify for the additional $1,500 payments, you may need to take extra steps to claim these amounts, likely through a simplified filing process that will be announced soon. Additionally, if your income has decreased since your last tax filing, potentially making you eligible for a larger payment than your previous return would suggest, you may benefit from filing your 2022 taxes as soon as possible. Conversely, if your income has increased above the eligibility thresholds, you will not be required to return any payment you receive based on previously lower income levels, thanks to a safe harbor provision that protects recipients from repayment obligations caused by income fluctuations. Economic advisors to Congress have explained that the decision to approve such a significant payment was driven by several factors. Although the broader economy has shown signs of recovery, individual households continue to struggle with accumulated debt, high housing costs, and inflation pressures. The $5,000 amount is intended to provide substantial relief that addresses multiple financial needs rather than just covering immediate expenses. In fact, economic models suggest that previous stimulus amounts were insufficient to spur the level of consumer spending needed to sustain economic recovery, and this larger sum is projected to have a multiplier effect in local economies. As recipients spend on long-delayed purchases, reduce their debt, and cover essential services, this surge in consumer activity is expected to support job retention and creation across several sectors, especially among small businesses and service industries that have been hit hard by ongoing economic challenges. With all this in mind, what should you do with your $5,000 stimulus payment once it arrives? While financial needs vary greatly among households, experts recommend a balanced approach. For those with high-interest debt, allocating a portion of the payment to reduce these balances can yield long-term financial benefits. Simultaneously, building or replenishing an emergency savings fund is crucial, especially given the lingering uncertainties in the economic landscape. Prioritizing necessary expenses, such as healthcare, home repairs, or other essential services, may also prove to be a wise use of these funds. Additionally, financial advisors suggest that this period might be a good opportunity to reevaluate your overall budget and consider how best to secure your financial future with a mix of debt reduction, savings, and strategic investments. Concerns regarding inflation have also been addressed by economic officials. They note that the timing of this stimulus coincides with an easing of supply chain issues, which had previously contributed to inflationary pressures. Moreover, because the payment is a one-time measure rather than part of ongoing government spending, its long-term inflationary impact is expected to be limited. The legislation even includes mechanisms to monitor price stability and adjust other economic policies if unexpected inflationary trends arise after the distribution of funds. In summary, this historic $5,000 stimulus check legislation is a comprehensive effort to provide immediate, impactful economic relief to American households facing ongoing financial hardship. It not only increases the base payment and extends eligibility to more groups, but also introduces additional support for dependents and implements a rapid distribution timeline that could set a new benchmark for future relief efforts. As we monitor further developments and detailed announcements from the Treasury and IRS, it is essential to stay informed and take prompt action to secure your benefits. I encourage you to like, share, and subscribe for continuous updates, and leave your questions in the comments so that we can address them in upcoming videos. Remember, your financial security may depend on how quickly you act, and this comprehensive stimulus package is designed to support you through these uncertain times. In addition to the points mentioned, experts are also recommending that recipients take the time to review their personal financial plans and consider consulting with a financial advisor to optimize the use of this temporary boost. With proactive planning and informed decision-making, the benefits of this stimulus payment can extend far beyond immediate relief, paving the way for a more secure and resilient economic future.